Hitesh Eidnani from Trend Tech Consultants for technical analysis. Radhika, Hitesh, thank you very much, both of you, for joining me here on BioCell. First caller joins us from Andamans, Mr. Yacob. Hi, Mr. Yacob. Go ahead, sir. What's your question?
Yeah, good afternoon.
Good afternoon.
I hold Reliance Infra.
Okay.
95 shares at the rate of 721. Yes, I am a long-term investor.
Okay.
Yes, I want to know whether I hold it or I will exit from this stock because David is struggling.
Right, sir. It is struggling, but there's a lot of buzz, news, rumors around Reliance PAC, Anil Ambani Group stocks, and some of it has also come down on Reliance Infra. Just to read out the top line numbers, net profit, Reliance Infra reported an increase of 10%, and in fact sales you can see is 13.9% and profit about 4.48%. EPC order book position of 23,500 crores. Consolidated net worth of the company is 22,110 crores. Radhika, Reliance been declining, and that's the reason why the investors are a little worried. It has slipped below his purchase price of 721. You think you should cut his losses?
I think so, Manisha, because Reliance Infra was in this range of 950 to 1150 from July 2009 to November 2010. It broke down from that range in how prices hit a low of 500, and the trend is clearly down now. If prices were to go above 750, I would get a bit bullish on it, but currently clearly the trend is down. The investor is not losing a whole lot of money, so my advice would be to exit currently and save yourself from the pain of potentially further lower prices from here.
There you go. Mr. Yacob, please get out of Reliance Infra. It is a very strong long-term story, but then the entire pack, that's the Infra pack, is a little bit under pressure, and there's an extra pressure on the Anil Ambani Group companies. So unless you have huge amount of patience, you should switch over to another stock. That's what Radhika and Hitesh believe. Next up, we've got Alauddin Basha joining us from Tamil Nadu. Go ahead, Mr. Basha. What's your question, sir?
I'm asking the brother.
आपके पास Unitech है?
Yeah.
And you bought it at 94 rupees, so very expensive. How long would you like to hold on to this stock?
6 months.
Alright, 6 months, Unitech. I really wish, Mr. Basha, you'd called us earlier, because for at least the last 2 quarters, we've had most analysts, in fact almost all analysts, recommend a sell on Unitech. Numbers which came out, which is December quarter results of the company, have been extremely disappointing. There's a 14% dip in profit after tax, and sales is up, but just look at the amount, 2%. That's all that you can see, even on top line numbers. Radhika, Unitech. Retail investors, Hitesh, don't have a stop loss. They keep hoping for a recovery, and look at the value that's got reduced in Mr. Basha's portfolio. 94, the stock's down to 36. Should he just save what he's got and get out, or should he at least, or do you think there could be at least some amount of bounce back, maybe of 40 rupees possible, or not at all after the numbers?
Manisha, I agree with you. I mean, most retail investors don't have a stop loss, and that's why this problem keeps cropping up. Real estate, like you pointed out, we've been bearish on the sector for quite some time, because the trend has been down for quite some time, much before prices got battered so badly. Now, obviously, the investor is in a quandary whether should I hold on. I've lost already 60-65% of my investment value. But see, either you increase the time horizon. 6 months is not enough, or potentially not enough, to see a real big bounce back in real estate. If you had a 5 to 10 year view, you could hold on to Unitech and hope for the company and the sector to turn around. But if you're looking for a 6 month kind of time horizon, it's very difficult to say. You could find Unitech trading at around 2022, which it hit in 2008. So my advice would be to cut your losses short and exit if your time horizon is only 5 to 6 months. But if you're ready to have a 5 to 10 year kind of an investment horizon, then you could potentially hold on to this counter.
When you're sitting on such a big loss, there are only 2 ways of looking at it, as Hitesh just mentioned. Either you just forget about the losses you've made, cut them short, and exit now. And just protect whatever money you've got left, or then forget about the stock completely. Wait out and see where it goes. If you're anyway not making much out of it, then just keep it, forget about it, don't worry about it. Very difficult to take which way would you like to go, so it's your independent call. We'll come back with his next stock question. Go ahead, Mr. Kambati. What would you like to know, sir?
Good afternoon. I have about 100 shares of Cummins India, bought at 655 recently after the results were announced. I'd like to know whether I can add more of my stock. So that's why I'd like to know whether it's a fundamentally strong company for me to add on and hold it for about years or so.
I must say you took a brave call to buy this stock after the numbers came out. There were lots of negative calls because the numbers fell below street expectations, except the management said that the Q4 numbers would be much stronger, growth would be much stronger, and I think 655 was an excellent buy price. Wasn't it, Radhika? He's sitting by Mr. Kambati, Hitesh, Cummins India, bought at a good time?
I think so as well. Cummins is a company which performed excellently in this bull run in 2009 and 10. It had a very smooth uptrend and it jumped from 148 in March 2009 to around 815, 820 odd levels. My suggestion would be to hold on to this counter, keep a stop loss of 600 and ride the rally if we see it, which potentially should happen in Cummins.
There you go. Mr. Kati, hold on to Cummins India. You've made a good investment decision, sir. You're holding on to a good stock. Numbers for December quarter were a little below street expectations, but the management has promised that Q4 is going to be much better. So hope if that happens, it should translate into higher price for the stock as well. Mr. Ayappa is now with us on the phone line from Chennai. Hi, Mr. Ayappa. Good afternoon, sir. What would you like to know?
Hi. I've been holding the stock Patel Engineering.
Okay.
I just want to know the prospect of the stock for the next 3 to 6 months. Since the risk profile is pretty high, I just want to know where the stock will be going in another 3 to 6 months. I mean, where do you see from today?
All right, 183. Patel Engineering has been hammered for the last 1 year, but that's pretty much in line with most engineering, infrastructure and EPC companies. I mean, barring, let's say, a Larsen & Toubro sort of company. Hitesh, Patel Engineering, do you see any respite at all? He says that he's a high-risk profile investor. Should he punt on this one?
I wouldn't think so because the charts are bearish. Discounted to nothing in 2010 and had broken down in and around November 2010. My suggestion would be to exit this counter, wait for some time. If there's a rally in the market, you'll find a number of counters which start trending, and if you're interested in punting, get onto something which is trending upwards rather than trending downwards, because there's no point in catching a falling knife.
Hitesh, what about you? Tata Steel is one that Radhika has mentioned. Everyone's waiting for the numbers today. Is that also in your list? And of course your disclosures.
Manisha, I'm still waiting for 55.50 to be taken out on the Nifty because that would give me some comfort that this rally that's happening is just not a bear market or cat bounce, but a resumption of the bull market trend. So I would wait for 55.50 to be taken out and a model to throw a buy before giving any recommendations. By way of disclosure, Trentech Consultants, me or any of our clients could have holdings in any of the counters discussed today. Thank you.